everybody, Alex here. Welcome to my Finance and Accounting Education channel. Today we are going to talk, since it's already 1st of February, we are going to talk about the January 2022 madness. So January is already gone by, and we can say that we have final numbers for January, how the indexes all over the world behaved in the January, and boy, it was a ride. I can tell you already, in case you have followed the news and you've seen the mostly red days in January, you know that at the end of the January the markets recovered a little bit. I'm talking about the stock markets, so the stock exchanges, the shares prices. Mostly I'm not that interested in, already in cryptocurrency, so there will be absolutely no mentioning of this topic. But before we jump right in and we comment a little bit about the events that happened in January, I'm going to ask you to subscribe to my channel, to hit the bell notification button, and you'll never miss an update on my side. I do them quite regularly these days. You should expect new and hopefully interesting videos from me on Tuesdays, Thursdays, and also on Sundays. That being said, so going right in, we are talking about the January 2022 madness. I think I did a similar video in September. Back then I named it Markets Gone Crazy. It's similar. I couldn't name it again Markets Gone Crazy because then you wouldn't understand what's the difference between the videos. I'm saying that corrections were expected. Namely, I'm linking right now another video of mine which I did in mid-December, I think, with the 2022 economic outlook. 2 or 3 major points which I was giving you back then. Okay, besides the 3 negative macroeconomic phenomena which are expected in 2022 to somehow take shape and to happen, which were inflation, so high inflation, which is already with us and it might stay with us also during 2022. Then another one was, let's say, stagflation, so somehow having moderate to high inflation, but also with the economic downturn or recession, or simply a recession. So the perspective for 2022 are not very positive from my side. We were also laughing about the Kathy Wood's deflation and her thesis, which is like has nothing to do with the current events. Probably, yeah, it's worth talking about what she's telling about deflation, but it doesn't apply right now. And yeah, basically January 2022 was no surprise for me, and let's see why exactly. So the global context somehow peaking, so it's not something that happened exactly in January, it's somehow picking up from the last months from 2021 as well. So inflation numbers remain high throughout the world, with energy prices growing, so which is, let's say, one of the fundamental cause and the most concerning, let's say, phenomena which is happening, which is also fueling this general inflation. Another one which is also fueling the inflation, which is only natural because it's somehow shrinking the offer in the markets of any kinds of goods and services, the fact that the supply chain, so there are still supply chain and logistics problems in place, and we all know about the semiconductor shortage and so on and so forth. The economic growth and employment seem to be not secured yet. Some numbers are not, let's say, not that positive, meaning that if you are looking in the quarter 4 of 2021 against quarter 4 2020, you might have some growth, but against quarter on quarter, so against quarter 3 of 2022, you might see a slowdown. For example, the numbers in Q4 2021 in the United States in retail were quite disappointing. They were expecting better numbers, especially with the Christmas. Then it's clear that the central banks, especially Fed, let's say that the European Central Bank is a little bit more moderate about it, and it's only natural, but at least the Fed is expected to start taking an active position against, and they said that they will take an active position against inflation, first by tapering, so reducing the bonds acquisition, second by having some increases in the interest rates, expected 4 times, or 4 increases this year, and inflation is no longer transitory after so many months, and having let's say being on a increasing trend. You can no longer call it transitory, it's already an inflation which is persistent. And what other effects I could add to the list, also the uncertainty about the Ukrainian and the Russian war, which will probably push the energy prices for Europe even higher, but let's say that's not affecting the entire world, or at least not the United States that much. And another event which is happening in the past months and in January including, is this Omicron version, which seems not to be stopped by and we knew already that the vaccination doesn't prevent infections, and we are moving from a stage where the governments are ordering officially lockdowns, which are very bad for the economy, to a stage where the several companies and in various sectors and so on and so forth are still hindered, so they are in lockdown, in a unwanted lockdown and unordered, not in an official lockdown, simply because the employees are infected and they need to stay at home and quarantined and so on and so forth. And we've seen a lot of, for example, a lot of air routes and flights that were cancelled because they didn't have personnel. And also in Europe some changes were made about the quarantine duration and so on and so forth. So we have somehow moved from official lockdowns to de facto, so factual lockdowns that happen because this version is so infectious and so on and so forth. So you see, those were the problems which we had in the past months and in January too. And of course this came to a lot of sell-offs in the market, which drove the prices down. And let's say, from my point of view, which were the categories of people that were mostly influenced and tempted to do this, and most of them did it already. So we had the leveraged investors, which got scared about the possibility of interest rate hikes, which didn't happen yet, but the people that worked with borrowed money from brokers doing margin trading and so on, these interest rate hikes didn't happen yet, but probably they got already scared. Then there are people which are not long-term investors, that are, let's say, not cut out for stock investments, that got a lot of money maybe from the stimulus checks, especially in the United States and so on and so forth, and they threw some money in the market. And of course, when they saw a little bit of red, they panicked, and probably they also want to go in something more safe, like in the bonds, for example, although the coupons, also the let's say the interest rates on bonds are not that good, or not yet that good, so it's not really justified right now, this switch. For example, I've heard of a YouTuber which I used to follow, but I'm glad I'm no longer doing it, which was had a lot of money invested and lost like 45% of his investments, maybe because he was in this group of people that invested in highly volatile stocks, in some local regional companies from the United States. Nobody heard about them, so medium, small caps, stocks with no earnings, shady IPOs. For example, I did a video about being bearish on tech IPOs, which I'm linking right now, and you can see there are a lot of companies which are being launched. They don't produce any money, either in forms of revenues or even worse in forms of actually in forms of profits, or even worse in terms of revenues. And of course that those are the first one to be dropped because they bring the most uncertainty in a portfolio. And of course the short sellers, the bears in general, that saw the opportunity of selling stocks and trying to make money just out of selling stocks they don't have. So what happened from index's point of view? Exactly, so we had in S&P 500 we had a minus 5.86% in January, so which is nowhere near that bad. And if you can see at the end of the January, the stocks kind of bounced back, and it's expected to go like this. We have already seen that also on 1st of February, and we will come back to the European markets, probably also in the United States it will happen the same. The Dow Jones Industrial Average only 3.97. Here you have, let's say that you have more value stocks or more established stocks, and it's only natural that the index got not that much beating compared with S&P 500. And also the numbers of companies it's reduced compared with the ones included in S&P 500. Then you have the NASDAQ composite. Here you have all the IPOs, all the tech companies, and yeah, you see all the small and medium caps. Of course, it took the hardest beating, minus 10.06% in January. Then we have the DAX, which is corrected because this 2.48 includes 1st of February already. So I took the gains on 1st of February, and actually for January it lost 3.43%. So you see already not that much, in line with the Dow Jones Industrial Average. The DAX is the German stock exchange index. Then you have the FTSE 100, that's from London, so from United Kingdom. You see that almost got no correction, so minus 0.5%. So it's absolutely not that relevant. But just as I have said in the economic outlook for 2022, you can expect that some of the previous gains are wiped, or the gains will no longer be that high as in 2021. And then we had the French CAC 40 with minus 3.02%, also bouncing back on 1st of February, and we will see, but let's just say that the evolution was not that dramatic. On my portfolio I had a minus 2.62. I haven't sold off all my portfolio. This YouTuber guy that I was telling you about, that he lost 45% approximately of his investments, sold everything in panic, of course. Mostly because I don't panic. Second, because I'm a long-term investor and I don't invest based on whims. And you know, I had two sell-offs. I'm making right now the video. I sold two also value companies from my point of view, so BMW and Allianz, two European companies, a luxury car manufacturer and an insurance company or financial services company. But I have explained already, that was, let's say, the second video about Allianz, and I have explained what I have sold, why I have sold them, and the reasons behind selling those specific titles had absolutely nothing to do with the actual or context or with panicking, or so it was like kind of programmed. I actually wanted to sell them before 31st of December 2021, but I didn't got the growth. I actually got the growth in those stocks during January, which was surprising, as you can imagine. When everything was red, I got growth in those stocks to the levels that I was anticipated, and I sold like let's say like a maximum line that they can somehow achieve. Since I sold them, they didn't jump above that line, so I'm quite confident that I made the right decision of selling them. But all the others stayed, all the other titles stayed in my portfolio, so there was no panic. And that being said, I hope you enjoyed the video for today. It's not very long. If you like the video, do not forget to hit the like button, to comment in the comment section if you have something to add to the topic, to share it with somebody that might be interested about understanding what happened in January. It was an interesting month. We got used a lot with green and with very high growth, at least in 2020 and 2021. Just as I have said in the video about 2022 economic outlook, this might change in 2022, and which is anyway making the things more interesting. Also below this video you have links. You can create a eToro account and trade their CFDs, which are mirroring the shares or also cryptocurrencies, although I don't recommend you the cryptocurrencies, and many others, and trade there without a commission or a fee, which is let's say a saving no matter how often you are trading. If you are a day trader or you are trading once every few months or once per year, not paying a commission or a fee, which you probably do with the regular bank trading accounts and so on, securities accounts, it's a benefit for you. Below that, you also have a link with an Amazon wish list with the hardware and software items which can help me improve the quality of my videos, being also beneficial for you. But let's just be honest and say that from financial point of view, that might be the most inconvenient for you. The easiest way through which you can support me in the following period is to subscribe to my channel, to hit the bell notification button, and not missing an update on my side. I hope that my videos are quite interesting and educating and entertaining. At least probably on this side of entertainment I should work a little bit more and tell you some more jokes. And yeah, my name is Alex Petrescu. This is my finance and accounting education channel here on YouTube, and I look forward to presenting to you with the next opportunity. Goodbye.